Hello and welcome to Crux Investor. We caught up earlier today with Jose Vizquera, who's the president and CEO of O3 Mining. We like this story. It's come out of the Osisko stable. They have done a little bit of decluttering and house tidying and kind of focus on two projects at the moment. We talked through what they're going to be doing on both those to develop the PEAs into PFS later this year. They've raised a lot of money recently, which is going to enable them to do a lot of drilling. We talked to them about their plans for fitting that information into the marketplace. What are the timelines, catalysts that we should be looking for? If you want our thoughts and opinions on the conversation, the topics discussed, the CEO and the company, you can find that at cruxinvestor.com/club. We can also find detailed company reports and analysis. There's commentary from experts from around the world on a variety of commodities and companies, including our weekly shows on there. Training courses for your pleasure. If you would like to improve your diligence process, we've got summaries of interviews too, just to save you some time because you tell us you're quite busy. And if you want to join a thriving community of investors sharing their thoughts and ideas with each other in a nice, friendly and safe environment free from trolling, judgment or abuse, you can go and join them at cruxinvestor.com/club. I think you'll find it useful and you'll like it. And we love your feedback too, so give us a like, leave your comments below. We'll get back to all of you. And if you want to see precisely what we talked about today with Jose, take a look at the description below. Jose, how are you doing, sir?
I'm doing very well. Thank you very much for inviting us. It's great.
No, fantastic. Good to have you on. It's quite a story. We've been wanting to hear this story for a while. So appreciate that. So let's start with, where are you?
I'm right now outside of Toronto, as you can imagine. And we're doing very well. We're spending time with the family as we should and taking advantage of that.
Good, man. That's what we like to hear. Have you been taking part in the sort of BMO conference this week? Have you any feedback from that?
We have, and it has been very interesting. A lot of inbounds, a lot of conversations with different funds. We had a lot of, I like to call it fun. We had a lot of fun, talking about our story, passing the message, and good times here.
Okay, cool. Okay, glad it's going well. Well, look, do me a favor, Jose. Could you just give me a 1-minute overview of the business, and I'll pick it up with some questions from there.
Absolutely. We are an exploration and developer company based in Quebec, specifically in Val-d'Or. We assembled a very nice land package, probably the most prospective land package right now within the Cadillac Break. And we have there already 3.9 million ounces of gold and a PEA with $423 million net present value at a 5% discount rate.
Beautiful. Okay, good. We were researching your story. It was really busy. It seems to be a lot of moving parts in it, and I want to kind of deconstruct that, if I may, so I can understand what it is that we're looking at. Okay, so first of all, you're in Val-d'Or, not a bad part of the world. A lot of M&A happening there at the moment. How did you end up with projects in Val-d'Or? Why did you pick that as a target?
Well, Val-d'Or is one of the most prospective grounds in Earth, I would say. From a jurisdiction standpoint of view, it's one of the best places you can choose. The law is always there. You also have the benefits of the flow through. So when you raise money, you're not diluting shareholders as much as you do like in other jurisdictions. We feel very confident and comfortable with Val-d'Or since our founders built the largest Canadian gold mine, such as Canadian Malartic. And we feel very confident and very happy to be in Val-d'Or. Val-d'Or is a place, again, where more than 30 million ounces has already been produced, not found, but produced. So great place to be.
Yeah, well, you better explain what the O in O3 mining stands for then.
Yeah, so the O stands for the third version of the Osisko Mining Group. And that's what the 3 stands for O3 Mining. Yes.
Right. Okay. I thought we better make it a bit more obvious as to where that came from, because there's a lot of M&A activity. People want to be there. Are you getting a bit of feedback in terms of your projects and people getting excited about the district?
Yes, of course. First of all, I must say that Val-d'Or has both high grade and low grade. High grade with a history of LaRonde, Goldex, Lapa, Sigma Lamaque, Kina. No, and the low grade has been Canadian Malartic. So you have a little bit of both. In terms of the M&A activity within the area where we operate, we are essentially now the only one left. with less than $200 million. All the other players are now major players with more than $1.5 billion. Monarch was acquired by Yamana, QMX was acquired by Eldorado, and therefore the only one left in the area close to infrastructure or very close to current infrastructure is ourselves.
Right, interesting. Okay, well, let's find out who yourselves are. So talk to me about the team experience relevant to what you're trying to do here.
Well, we are a group of young professionals with a lot of experience, starting with our Vice President of Exploration, Luis Gariepe. Luis is a French-Canadian Quebecer that has been in the industry for more than 30 years, spent a lot of the time of his career with Noranda, then spent time actually where I come from in Peru. And now he's returning back to give back to where he comes from and hopefully coming and making more discoveries. Within our team, we also have our business development person, Alex Rodriguez. He has been working for one of the largest silver producers in Peru called Volcan. And I think we wrap it up with Sebastián Vigneux, which is our exploration manager in Val-d'Or, who has extensive experience and has been working in the region for the last 15 years. And I think something very important is that by being a group of young professionals, allow us to take chances that other professionals will not take. Like we did artificial intelligence into Alpha, and that is now bringing us a lot of opportunities. We were able to rethink Marban from a total clean structure, and now Marban is a project that has a net present value of $400 million and an IRR of plus 20%, something that would have not been structured if you didn't think from a clear standpoint of view. No,
I think that is interesting. I definitely do want to talk about AI. I'm kind of thrilled by companies starting to change the way they approach mining, because it needs to happen on many fronts. But look, we'll get on to that. Talk to me about what you set up. Okay, I'm interested in always in the company's business plans. You've got to walk in with a plan. You've got to know what you're trying to do, and then you've got to have a strategy to deliver it. So talk about when you started. What was it that you set out to try and build?
Plan was set up really many years ago. It's interesting. We're now in execution mode, really. When we put all the assets together into Osisko, we thought that everything was going to work perfectly at the beginning. Then we realized that some of the assets had more love by the market than the others. So we were not getting value in some of them. So we decided to put them into a company to start creating value. As part of that, the concept was always the same. We are going to build an intermediate producer company in Val-d'Or, and we are going to get rid of all the non-core assets. Within that, when we did that operation, we started by getting rid of some of our assets that were outside of Val-d'Or. We recently got rid of Garrison, which I prefer to call it reallocated in a place that fits better, like in Moneta Porcupine. And they're building a very interesting project in Val-d'Or with 8 million ounces. And now we're focused in Val-d'Or in an area where the Cadillac break goes through. And this assembled package now will allow us to be very systematic in our exploration. Part of the issues that we have in these very old camps is the fact that it has always been fractionated. So people say, why nothing was found? Well, of course it was not found. If there is something here, the other thing here, and you don't want to drill your competitor's ground, then nothing is being done. And it's not until these consolidations start to happen that suddenly you can start doing proper exploration, being very systematic. Proof of that is what we're doing here in Alpha, where now you can put all the information together, from geophysics to information from prospectors to theses from PhDs and postdocs, that suddenly you can put all together and then start working with the data.
Right. Okay. It was interesting at the beginning of last year when you were sort of, however you want to phrase it, you were cleaning up the portfolio and cleaning up the balance sheet somewhat, and I think that definitely did need to happen. And as part of this story, I'm keen to see how you continue to do that. The consolidation of assets is great, but you've then got to do something with these things. So you've raised a bit of money last year, somewhere in the region of like 40 million in June through private placement. You've also just been through a process of 35 million raised. So you're not shy in raising money.
Well, again, this goes back to what's your plan? What's your strategy? The strategy was always focused, we're going to put this into production in the next 6 years, period. In order to do that, you clean up the assets and you focus in the assets and create fundamental value. How do you do that? Right away, we went into there, we created a PEA, now we're moving towards pre-fees. When do you raise money? When the money is there, as long as it makes sense. What is the meaning of making sense? And for us, making sense is that we would never take money if we cannot create at least 3 times what we are diluted. That means if I'm raising $20 million, I need to have a clear target on where we are going to get enough resources that at least are going to be valued 3 times my investment. Now, on top of that, of course, if we do 10 times or 15 times in terms of fundamental value, great. But this is with the objective of within 5 years, being in production, and we keep moving fundamental value here, and then discoveries. If we bring discoveries as well, then that multiplies everything. So we work on those fronts at the same time all the time.
Okay, explain this to me, because again, CEOs come on here and they go, we're undervalued. We're going to create value. I'm going to go 3 times. Okay, you raised $40 million last year. Share price hasn't really done anything yet. So how do you measure success in that sense? We're going to deliver 3 times value over what period? Because people will be looking at that going, well, you've not done that.
Within a year. If I raise, for example, $40 million, which effectively get us a dilution of 10%, that's $20 million. Therefore, you run your discounted free cash flow on a particular area where you're going to devote a lot of your resources. That should give you at least $60 million in fundamental value. That's the beginning. So fundamental value is ready. From that point on, you start building onwards. And that is the point. If you cannot make the argument that you have a 3 times, you're not building here. So when we say we're undervalued, it's on the basis of fundamental value. It's not like, hey, I have 2.5 million ounces. A lot of people have 2.5 million ounces. The question is, are they economic or not? And that's what makes the difference between myself and our leadership and other companies. We focus on fundamental value on the basis of economics. From that point on, of course, we want the upside. But we're not just drilling here, and there. There is a clear objective of creating fundamental economic value for shareholders.
Right. So between last year's raise of 40 million and your recent raise of 35 million, 75 million bucks, 150 million market cap company, explain to shareholders and prospective shareholders precisely how you deliver fundamental value. Well,
we have now a pre-economic study, a PEA, with a $423 million. We have now in Alpha an area like Bulldog, where we have potential resources. What we like to call potential resources, maybe it's worth to explain that. It is when we drill every 100 meters. So it does not qualify to 43-101 as an inferred resources. Because in order to do that, for this style of mineralization, you need to drill every 50. But we already know we have 500 meters by 500 meters at 100. What's the next step? Drill in the middle every 50. That's what we're doing now. That's what I'm saying. You have fundamental value. We internally call that potential resources. It's not an NI 43-101 term. It's an O3 term. And every time that we raise money, we're thinking about how much potential resource we're going to build. And that has to be 3 times, because we know that the next step is just put it in the middle, elevate it in category, you keep building fundamental value.
Okay, so you're doing that step out, as it were, or that infill drilling, I should say. But I think that's encouraging, because a lot of companies do the shorthand version and they do small incremental step outs. They're not quite sure what they're going to find. You've obviously wanted to understand what you had geologically. We are focusing on putting this into production. We don't lose that sight. It's always put into production. 6 years from here, put into production. In the middle, keep building fundamental value while you keep making discoveries. That's very important. That's okay. Good. So you're not an exploration company. You're not a development company. You want to get into production. You're not just saying this. That's another thing CEOs say a lot.
No, we want to get into production. If in the middle, of course, someone comes and wants to interrupt this, then great, but do it for a lot of money. Meanwhile, we're going to keep building the next intermediate gold producer in Val d'Or, same as what our founders did.
Okay, fantastic. So let's talk about some of the assets that you've got. You mentioned, I think, your kind of flagship asset, Marban. So where are you with that in terms of how quickly will that get into production? What are the things that you need to do to get that into production?
6 years. Marban will be put into production in the next 6 years. The reason for that is we need to go through a lot of environmental permitting that it's going to take 2 to 3 years. And we know that. We cannot lie anyone. That's the time that it takes. Meanwhile, we're going to be growing the resources, bringing the resources to down to earth, meaning by that we are going to go from inferred to measured and indicated. We have the luxury right now of having 2/3 of our resources already in this high category of M&I. So we need to convert only 1/3 of the resources. To the point of this last raise, we're now converting from inferred to M&I, building fundamental value. Then that goes to pre-fees, then to fees, then back to production. How much money do we need to put into production? $250 million. Can we raise that? I think so. You raise $100 million, you get debt for another 150, you are there. If we manage to be very creative and we manage to create synergies with other people that has facilities around us, the capex is reduced by $100 million. That is part of the strategy and the vision. That goes back to execution. We always have a plan. The plan is to put into production. We know we can do it by ourselves, but we know we have to work in this other parallel side. So if we can bring the capex down, then it's much more value to shareholders.
And talking about which, you've also optioned a mill, haven't you?
We have an option for the mill, but that works only for Alfa, to be sincere. So the mill was sharing. But that's a great point, because you asked me what's part of the strategy, and I told you we want to put into production. When we bought the mill, we knew that it was the downside of the market. We knew we can get it for $5 million, and it's an option, not an obligation, for 6 years. Now we have 5 years to decide if we want to buy it or not. But with that mill, we know that we can process anything that goes out from Alfa. And we have reduced essentially $55 million in capex towards the future of the building the mine.
Okay. So you've got a rather large drill program scheduled, I see. Where are you going to focus that?
Very simple. We have 2 main projects in Val d'Or in the same jurisdiction. So half goes for Alfa, which essentially goes for expansion and discoveries, and half goes to Marban, where we are building fundamental value. And we have created this way of explaining where we are converting resources inside the pit, expanding resources just outside the pit, making discoveries at depth. And that's what we're doing in Alfa. And one easy way to explain it is if you look at it like this, and we have 2 faults. In the first fault, we are looking for the open pit material. And then we continue drilling, and down here, we want to find the gold. That's a discovery time.
I just saw the gold. That's good. We're just looking at your results, right? There's been a lot of drilling results coming through, and there's some exceedingly high numbers. I mean, world-class numbers, off the scale numbers, high grade. But as you say, that doesn't necessarily always guarantee success. It's the bulk, lower grade stuff that really adds to the metal, contained metal in the ground. So how are you going about the process of understanding how much metal you've got in the ground? We get the kind of PEAs, but it's plus or 30% on the numbers there. How do you increase the scale of what you've got there just through the drill bit, I guess?
Very interesting point. It is 30% plus minus usually on the inferred. What we have in measured and indicated, I think it's not going to move that much. The idea now is to convert the inferred first of all, moving it on a higher category. So now that's going to be in measured and indicated. And then in the outside of the pit, there has been areas that has not been drilled for different reasons. One of them is that there were some properties that were not owned by the previous company, that was owned by a grandfather, that now suddenly the grandson decided to sell it to us for $300,000. And it's a brand new area where the pit can be expanded. So now we're going to be drilling that area, of course, because it's just around the pit. And that's how we're going to keep increasing the resources around the pit for what we call the open pitable material. But then as we go from one side to the other, we keep drilling at depth. And to your point, I mean, Val-d'Or has been well known for high-grade ore. And Marban in general was always focused in the higher part, never went less than 500 meters. And we know that Val-d'Or goes deep up to 3 kilometers with La Ronde, up to 2 kilometers for Quina, 2 kilometers for 1.8 kilometers for Lapa and Goldex. So there is a lot of potential going at depth, which we want to make sure that we tackle that as well. And if we can end up with a mine that is open pit and then goes underground, then fantastic. Now, on the underground side, we still have to do work.
Okay, so what I've heard is you kind of, decluttered this. You're very clear about the two projects, your two core projects, about how you go about doing it. You've got the money to deliver the drill program. And you think that, I mean, it obviously the shine has come off gold slightly in the last couple of months, but you're still getting people, you were able to raise the money last month, no problem. People are still listening and wanting gold stories, right?
Not only that, I mean, we raised the money at over $4 because it's flow through shares. Our share price has declined now up to $2.50, so that shows that we probably raised the money at the right time. Now, to be sincere, there is no right time. I mean, we were probably lucky to raise the money at the time. It is a matter of what are you going to do with the money. It's not when you raise and how you raise, is what are you going to do? What's the value you're going to create when you raise money? So that goes back to a point. If I get a 10% dilution, I need to get back into fundamental value 3 times more. Does that make sense? Yes. Okay, we raise money. Otherwise, you don't raise money. Sometimes it's better not to do anything. In our case, we believe in the idea of creating things and keep advancing things. And that's what we're doing. So now we have a budget for 2 years. And now it's time to bring the head down and execute. Just execute. That's it.
And do you think that is going to be enough to turn the heads of investors again? Because obviously they got excited. Share price has gone off. They've got excited about something else or turned off of gold. Something's gone wrong. What do you think has happened?
Well, I think eventually we will go back to the fundamentals. If we think about how large investors think, like, for example, Warren Buffett, suddenly you're going to ask him, what is your best investment? And the answer will always be, I want to buy something for less than what is worth. Not for cheap, it's for less than what is worth. That's what it's going to make money for investors. So right now, if you look into our story, you are really buying something for less than what it's worth. Eventually, maybe not today, maybe tomorrow, we will have the opportunity to move this around. And when the market wakes up, it's going to be like, whoa. So that's the point. We keep executing, keep moving things along, and we'll get there.
Okay. So head down.
How investors are going to...
So the idea is head down, eyes on the prize, focus on what you can deliver. You've got the cash to do it for the next 2 years.
Yeah.
And we can expect to see a lot more drill results and these studies coming through as and when they are ready.
You know, I have learned that in our industry, fundamental value is very important, especially for executives like myself, because we want to be producers. But we have to be conscious of what the market wants. The market wants to see things big. They want to see the potential of having something very large. So we have to tackle both things. Build fundamental value, so we know that we have, at the same time come up with discoveries. And that's what we're trying to do here. And that is the best way as well to defend our company. Because if we are the only company within the break that is less than $200 million, who is going to be the next one being just wrapped up? It's us. So we got to make sure that if they are going to do something to us, that we have shown the value that we have with new discoveries. So we have to tackle both things, fundamental value, exploration potential, and discoveries.
You look like a guy who likes to do deals, though. Can I be sure that you're going to focus on these projects only and not be doing more M&A?
Yeah, you're not going to see M&A unless it makes sense.
Good answer. If it makes sense. Don't tell me. 3 times, right? 3 times.
3 times is on the exploration.
Okay. Well, look, I've really enjoyed this. I'm liking what you guys are doing here, and thank you for the explanation. Truly, you must stay in touch. There's a lot of drilling, a lot of intent. You're very clear today with me about what you're going to do, and I like that. So, Jose, I appreciate your time today. I know it's busy, BMO week. It must have been exhausting. So stay in touch and let us know how you get on, okay?
Hey, thank you so much for your time. Congratulate you for your program. You're doing a great job, and I think investors are appreciating what you do. Reason why we wanted to be with you. So congrats again, and all the best to you and your team.